Non-farm payrolls up 271,000 in October, Maria, well above expectations, and the unemployment rate falling to 5% last month, the lowest level since April 2008 in 7.5 years. August and September payrolls revised up a net total of 12,000 from previous estimates. And Trish, Maria, here is the job growth. There was a wage growth. There was a big jump in hourly earnings last month, up 0.4% to $25.20 an hour, up 2.5% year over year. That's the biggest yearly jump since July 2009. Job gains, broad-based. Professional and business services up 78,000. Education and health services up 57,000. Leisure and hospitality plus 41,000. Retailing, a big jump last month, 44,000. Construction up 31,000. But mining and logging, which includes oil and the energy sector, still weak, shedding 4,000 jobs last month. Manufacturing reported 0 new jobs last month. And the labor force participation rate, which we always like to look at, stuck at 62.4%, still at 40-year lows. Maria.
All right, really important report here. This was much better than expected, Peter. Thanks for the breaking news and getting it out there first. Peter Barnes, 271,000 new jobs created in the month of October. Let's take a look at this market reaction right here because the market is tanking. Ideally, I guess we're looking at futures coming in here, Keith McCullough, because it lessens the chance that the Federal Reserve will stay pat next month. Maybe this means Fed raises in December.
Well, as I've said multiple times, it raises the probability that the Fed makes a policy mistake. Don't forget that when you read this number, the prior jobs report just got restated to 137,000. So again, this is like the land of bizarro. I've never seen anything like this before, and I think the market is rightly concerned that the Federal Reserve could raise rates into this.
Well, that's why this market is trading down, Jack.
I wondered, was bad news going to be good news, or was good news going to be good news, or what? Clearly, we know good news is bad news. So I think the market is saying yes, it's a December rate hike. Clearly, Janet Yellen, she's made it clear she wants to hike. This is her excuse. It's going to happen. But you saw a revision of last month down to 137. I didn't see that.
I mean, if we've had and the odds are if they raise rates, we'll look back at this month and it could be 150. Who knows? There's a standard error in the number of 90,000. I hope everybody knows that. So it could be anywhere relative to what it's being reported as. But by the time they go back and restate them, every revision has been lower, including last month, a lot lower.
But we should point out that the general pattern in recent years has been that August, September got revised upward.
10-year Treasury up 9 basis points, Keith McCullough. 10-year Treasury up 9 basis points.
Yeah, and you have to look at this report, and it is more than just the headline. We have to dig into it, but it looks like the job growth is very broad-based, coming through with many of the job sectors, which is a real positive. And again, wages moving in the right direction. We're finally seeing some movement. We've been at 2%, not that 2.5% is such a big increase, but we're moving in the right direction. So I do think, to Janet Yellen's comments this week, what they were looking for, they are going to see in this report.
Here's what you wanted a bit.
A little bit, but you know what, 5%, it ain't what it used to be.
Yeah.
I mean, let's take a look at labor participation. The reality is you still have 93 million Americans,
62%.
Right? 62%, a little bit of improvement, but still, you're back at a level you haven't seen since the 70s.
Yeah.
And so, overall, yes, it's a step in the right direction. We need many, many, many more steps like this in the right direction. I don't like the idea of the revision down to 137, you said, 137K? Last month. You don't know where this is going to be revised to. We need many, many, many more reports in the 271,000 range in order to actually get some real growth.
Again, if you look at, and I've tweeted this enough times that hopefully you can see it, the non-farm payroll number peaked last year at 317,000. We've been ticking down, down, down. This one looks like Waldo. If you were looking for it and you were the Fed and you wanted to find something that had a big 2 in front of it, this is literally the only one in 6 months. So if you look at it for what it is, it's a peculiar number.
Yeah.
And when you see the market reaction like this, I tweeted this as well, which is if it's a good number, if you want to buy bonds, wait 4 hours because you're going to see the market price in some fear of a rate hike. And if it's a bad number, just buy bonds anyway because it's just the trend continuing.
But do we really think that they are going to move in December? I mean, they keep setting that expectation up over and over and over and over.
You know they want to get off
They've
zero,
been
right,
waiting
Trish?
for one reason. This is literally, you talk about Waldo. I mean, just talked about Waldo. I don't know why I'm talking about Waldo, but the reality is that if they've had nothing but misses, new home sales, durable goods, GDP cut in half. They've been waiting and watching. The cynic in me says that there's somebody who made up that number just to give them a reason to raise by 25%.
I think they raise in December. Even if the economy is too fragile to do it, they're going to raise because they're desperate to raise. They want to raise rates.
And they want to do it before it becomes too political.
Correct. And then what do? You do it in 2016 during a presidential election.
Yeah, Janet Yellen, I don't know if anyone knows, but she is a Democrat.
There you go. Well, it's good that no one knows then.
Well, it's a good
Well,
thing.
you let everybody know.
If you didn't know, now you know.
No, I'm just saying, because if she's not showing that she is, then she's independent.
She's
there you go.
Now,
Reserve is so independent.
if you were chairman of the Federal Reserve and you were part of the conspiracy to re-elect the current administration or their follower, you would keep the rates down. I mean, you wouldn't raise to help Obama or to help Hillary Clinton or whatever. So
and or not raise them later, like closer to the election, which is what Trish said.
I think that's the point, right? She doesn't want to be into 2016 having to raise them in such a political environment. It's easier to get off. And then she said, okay, well, we're not on zero anymore. I just question it because I think at the end of the day, you have a whole bunch of academics that think they can tinker with the economy and that they can really make a move. In terms of getting us to grow, they haven't been able to do it thus far. And I think you're having to take away some of that will, right? If they come out in December and raise, that's them not following through with their sort of academic theories.
If they don't come out and raise in December, I think you'll get a lot more questions of why not, because the last jobs report that we had, and we sat here and talked about it, it was so terrible that we knew it put doubt in
it's been a ping pong match. It really has.
This particular report, there's a lot of good news in this report. I mean, still, it's not so robust, but much better,
so
much more
where are the
improvement.
jobs, Joanie?
You know, it's professional and business services. We're seeing retail jobs, obviously, coming into this time of the year, but those numbers are also seasonally adjusted. We did see some construction jobs come back, you know, which is
manufacturing still dead in the water.
Yeah, manufacturing is still a real challenge. I don't think we're going to see those jobs.
That's not a big surprise. And manufacturing includes oil and gas. So that's not a big surprise at all. You know, one thing about this number...
How about consumer? What about the consumer jobs? Go ahead.
Oh, it jives with the jobless claims. So jobless claims has been going down while payrolls weren't really going up, which was weird. And now this number says, oh, okay, those two data points actually make sense together.
But again, if you go back and you look at the revisions on last month, it's like all that is, it's fine to say on the number.
But August was up 17,000.
But these are all, like, again, if you look at the rate of change of the complex of non-farm payroll gains, they've come down from 317,000 to 250,000 to 137, and then you get this Waldo print.
Yeah.
And I think you need to see, if the Federal Reserve, first of all, is going to raise rates, they need to signal that today. Like, because that's going to be the best number that you could possibly see, maybe for the next 3 years. I mean, if they need a number, that's got to be the number.